Today we're going to be discussing why Tesla has just been doing so well in the market, and then we'll also briefly talk about some great news for MasterCard and Visa in the Chinese market. So Tesla has just been an absolute rocket ship, or should I say an electric rocket ship, if that's even possible, ever since its last earnings report that absolutely blew expectations out of the water. Now, its next earnings report is on January 29th. Now, it's hard to believe, in just 3 months, Tesla stock has more than doubled when it reported profits in its third quarter's earnings report. That doesn't mean that everyone is bullish on Tesla, though. Tesla actually just overtook Apple to become, yet again, the most shorted stock in the US, eclipsing the $14.3 billion in short interest by Apple by actually over 200 million more. But keep in mind that Tesla is actually just 1/14 the size of Apple by market cap. So who's right on this? Is it the bulls or is it the bears? Let's first dive into some reasons why Tesla has been doing so well. Now, the first reason why Tesla has been doing so well is because the Model 3 sales have absolutely soared. They have more than doubled from 301,000 in 2019 compared to just 146,000 in 2018. Remember, the Model 3 can start around a $35,000 price tag, which is more affordable for typical Americans than the more pricier models. Also, Tesla vehicle sales are up 50% year over year, which is actually in part with what Tesla had been forecasting at the beginning of the year, surprisingly. Also, its new factory in Shanghai, China, was just completed in under 12 months, and it's ready to start production already at the start of 2020 here. Tesla believes that they can produce 3,000 units a week, and they already started battery production in late 2019. The completion of this Giga Factory 3 is hoping to release around 250,000 electric vehicles a year. China is giving Tesla a subsidiary on Model 3s, which means Tesla can also lower prices to compete with its rivals in China. Also, if Tesla totally collapses in China, that's not a reason for you not to hit that like button if you are liking this content, and make sure that you subscribe to the channel as well if you haven't already done so. So moving on to the next reason is that Tesla is finally posting positive cash flow. If there's one thing that investors like to see in a company, it is if the company can actually make money. Well, maybe in 2020 it doesn't really matter. But Tesla went from negative $222 million in cash flow in September of 2018 to positive $872 million by September of 2019. That is an amazing jump in just 1 year. Plus, they are also forecasting to remain cash flow positive in most quarters going forward. That means if Tesla is able to continue to improve its economies of scale, they should be able to fund their own operations. Hopefully, that means there's a less of a chance of being dependent on equity raises by incurring more debt in the future. So once those financials finally begin to be more stable, maybe short sellers will finally call it quits on Tesla stock. Another reason why investors are so bullish on Tesla is for its future vehicles and the excitement around them. Now, this large semi-truck uses all 4 electric motors, and it can go from 0 to 60 in just 5 seconds without a trailer, and it can hit highway speeds in less than 20 seconds without a full trailer. That is far quicker than a diesel-powered truck. Then there's this knockoff Batmobile looking vehicle, which is apparently a mix of a sports car and a truck called the Cybertruck. And this car has armored glass in case anyone is trying to pull a drive-by on you. But it can tow up to 7,500 pounds, and it comes with the autonomous features starting at around $40,000. The Tesla Model Y, a crossover SUV, will also be released later this year, offering even more cutting-edge technology and stunning acceleration from 0 to 60 in under 4 seconds. Tesla is really ahead of the game in terms of the batteries that are used in its car, as well as autonomous driving. Tesla should be able to push the limit for a battery that can go over 400 miles in one charge in the near future. And with more and more EV charging stations being built, long-distance road trips are definitely a reality. Not reality, of course. It's going to take competitors years to catch up to where Tesla is right now. Keep in mind that Tesla is able to mine over 650 million miles of autonomous driving data every month to help improve their already impressive driving predictions. That's basically analyzing analytics to see what could possibly happen in the future, and in turn will probably make their cars even safer than they already are. All these other car companies are going to be playing catch up, while Tesla does autonomous circles on them. As for me, I am bullish on Tesla, but I currently don't own any shares right now. Tesla is becoming a cult-like company where everyone is just too bullish on it. Investors only have positive things to say about them after their last earnings report. Where were all these fans when Tesla was in the 180s at the start of June? When people were calling for Elon Musk to step down and that Tesla would go bankrupt. The problem is when there's so much optimism so quickly on a stock that it becomes way too overvalued. All that hype and future growth potential is being priced into the share price that you see here today at over $500. That has more than doubled in stock share price in a very short amount of time. So I'm expecting a lot of volatility regardless of what Tesla announces on their next earnings report. Whether that's good news or bad news, the stock will be very volatile. Even if it falls, I think investors have already missed out on the buying the dip opportunity, which was in the 180s over here. That's not to say that I don't think Tesla will continue to grow. So those are just a few reasons why the stock market has went really bullish on Tesla. If you have any other reasons, be sure to let me know in the comments because I'm sure I've missed some. Okay, so another topic I really wanted to talk about just briefly here was the signing of the first phase of the US-China trade agreement. Wow, it felt really weird not adding war after trade there. This gives companies like Visa, MasterCard, American Express, PayPal, and Discover all easier access to China's payment markets. China now only has up to 90 days to consider applications from US card giants to penetrate into their market. And Visa is already working really hard with the Chinese government to have digital payments ready in time for the Winter Olympics in Beijing, China, which is in 2020. China only has 1.4 billion people, so I'm sure they have a lot of plastic in their wallets and purses. This is a great opportunity for these companies to be able to get into a new market, and definitely a lot of expansion is on the horizon for these companies. This was an industry that was dominated for so long by companies that were controlled heavily by the Chinese government. I particularly love this industry because these credit card companies, they don't actually issue any risk. Rather, they are the middleman that facilitates transactions between merchants and customers, and then they take a fraction of every sale. And when you have billions of transactions, those fractions of each transaction can really start to add up. This is a very scalable business model, and that's why I'm so bullish on this industry, and I will continue. I've already made pretty good returns here. As you can see, 20% on MasterCard, and then on Visa, I'm already up 28%. So I'll continue to be dollar cost averaging in 2020. Their valuations are a bit high, but I really don't see either of these companies slowing down. And I'm just going to keep buying more shares as they continue to enter new markets. Remember, most of the world surprisingly still uses cash. So let me know if you guys are bullish on these stocks as well, and be sure to let me know what you guys are thinking in the comments and subscribe to the channel.